All right, guys. Let's see what Grab is gonna do today. Sorry, I mean Grab already beat, so we're good. I wanted to play a little video to hype us up for this call.
Proud and be fierce and you're willing to chew anything in your path, but at the same time also sort of have the humility of a lamb. It's like showing love all the time and caring for your people, while at the same time holding a really high bar because you love them, because you want them to do better, because you believe that customers expect much more from us and society wants to see many companies that have triple bottom line fail. So you got to prove to them that a triple bottom line company can not only survive but thrive.
That's Anthony Tan, CEO of Grab, the Southeast Asian rideshare super app that's rapidly growing from Singapore to Vietnam. As Uber expands globally, I wanted to talk to Anthony about how Grab outmaneuvered Uber in Southeast Asia, eventually acquiring its operations in the region. I also wanted to know how Grab has unexpectedly become a pioneer in AI implementation. Anthony talks about how he, quote, shocked the system at Grab to shift mindsets. Grab may not be a household name in the U.S., but it's a public company valued at over $20 billion that's in many ways setting the pace for how rideshare and super apps will evolve globally, from electric vehicles and autonomous driving to interacting with local and national governments. So let's get to it. I'm Bob Safian, and this is Rapid Response. I'm Bob Safian. I'm here with Anthony Tan, co-founder and CEO of Grab. Anthony, thanks for being here.
It's a real honor.
So Grab started in 2012 as a rideshare platform. It's since grown into Southeast Asia's largest super app, providing food delivery and financial services is more. The term super app is this increasingly popular concept. What does super app mean to you?
Well, the super app just means an app that has multiple services. If you look at how it's evolved here in Southeast Asia, we started just to solve.
Hey, everybody who just joined. I'm watching a little bit of Anthony Tan, a little pre-game for this earnings call that we have here. This was a really good interview that he did for Rapid Response. I really liked it. It's about 20 minutes long, but we'll jump into the call right after this. Have a listen, and then we'll jump right into the call.
Southeast Asian problems. For example, safety. Safety was a major issue. We wanted to make sure rides were safe for women and children. That was a real problem, and we solved that. And now at 99.9% safety. And then we said, okay, what's next? We realized, wait, but to get drivers, you needed to lend them a phone. How do you lend them a phone? Because many of them didn't even have a smartphone. So we said we'll start a financing business. So we have fintech built into the Grab app. So it's just like one service another after another. And then when we said payments, we said, hey, the driver became an ATM, mobile ATM, and it wasn't safe for them. So we said, you know what? Let's just take out cash out of the system. The drivers have a Grab Pay wallet. The customer has a drive not just more employment, within 20 minutes they can sign up to be a delivery partner, to be a driver. But as we got more supply, actually prices came down. So if you look at our financials, interestingly, we have more supply, which meant less surge sessions, which means lower prices, which means more affordability, which means more customers. Yet at the same time, our earnings per online hour keeps going up. So our drivers earn more per hour basis. So really, we're seeing a win-win-win as a counter-cyclical platform across all our cities in the region.
Yeah, of course, guys. Thanks for tuning in. The call has not started yet. I'm still on the investor relations site trying to get the link to the call. I don't think it started yet. When it does start, we'll switch over to that, and then we will all listen to the call together.
It's been quite a journey. You went public in 2021. I know the stock's gone up and down in that time. Right now, sort of, in what ways is your business at an inflection point? Like, what's the big urgency that you see now? Is it risk? Is it opportunity? What's next?
If you ask me, what's the biggest risk? I would say, look, for us, it's really about being stagnant.
Yes, I do have shares. I actually have a lot of shares. I've been buying since Grab was in the 315 range or so. I think my average per share is about, let me check actually. My average per share is about $4.05. $4.05 right here, average per share for me. I have a lot of shares. I've been buying, like I said, in the threes all the way up to, I think my last buy was right around 520 or so. And yeah, we already have the results, by the way. I'm not sure if I shared that, but we already have the results. So the results came in at a beat on the top and bottom line for Grab, $882 million in revenue. The estimate was 873, and the EPS was 2 cents per share versus 1 cent per share. Yeah, the market, listen, the stock's going to do what the stock's going to do, right? If you believe in this company and in what they're going to do in Asia and Southeast Asia, then, you have nothing to worry about here, right? Like, I hold these shares and I sleep very well at night. It's one of my largest positions. I invest in a lot of things, but I've actually built out this position since January of this year. So at the beginning of this year, I started building. 22 contracts at 5.5 expires 2027, June and December. Love it, dude. You're already in the money, so you're good. That's amazing. Oh yeah, I forgot to say, I also have some leverage plays on Grab. So I've got, what do I have here? Hold on a second. I've got, where are my leaps? I have some leaps. I did not do spreads. I do leaps. A little on the risky side, but yeah. I have, why is this not loading for me? Oh, there you go. Okay. So I've got a $7 call for December 2027. So this is what I have. I have seven calls, 2027 leaps on Grab. That's what I have. Let's see. So I'm up 35%. I'm up 35% for now. I have 500 contracts. 500 contracts. So I am leveraged. I also own the underlying stock, which I'm happy to own. As it goes down, I just buy more. Guys, we are still waiting for the call. So as soon as that link pops up on their investor site, I will start playing the call. It starts at 4 p.m. Eastern. Sorry, 7 p.m. Eastern, 4 p.m. Pacific. So we're still good. For now, I'll get back to this interview while I finish eating the snack that I have because I have not eaten all day. So thanks a lot for tuning in. Thanks a lot for coming. I probably have a lot of refugees from other live streamers. This is just me starting out. So, I tend to stream some of these earnings calls. The ones that are a little more obscure, right? Not the Amazons, not the Teslas, because I know like all the big streamers are doing that. So I'm venturing into these smaller ones. So thank you for being here. Let's get back to the interview real quick.
We talked about the geopolitical environment. We can weather uncertainty. We can really help communities become resilient. But we need to constantly change. So at Grab, we called it, how do you think about Kaizen, which is just 1% better every day. For every service, we just need to be 1% better every trip, every delivery.
Also, guys, interesting story. Anthony Tan mentioned Kaizen. Kaizen is kind of this like Japanese mantra around how you improve every day, like how you do something small that eventually gets you to the steps you want to take in the future. The funny story around this, though, is back in the day, I used to work at a delivery company called Postmates, not as a courier, like as an actual tech employee. And our CEO, he was a crazy motherfucker, but our CEO was all about this like Kaizen. So basically, I mean, he hopped on and off trends. So he's an awesome guy. But anyway, you can look him up. Bastian Lehman, that's his name. He was awesome. But he really drove everybody to really execute hard. And it's funny when Anthony Tan mentioned Kaizen, first thing that popped into my mind was Bastian. Bastian's a sick motherfucker, but we exited to Uber, so everybody was really happy. Okay, anyway, back to this interview real quick. And one thing I'll ask, post in the chat how many shares you have, how many options you have, where you're tuning in from, and let's keep this rolling.
Every order, every payment, but that's not enough. That's just not enough, Bob. We need what we call kaikaku, which is another Japanese term besides kaizen. It's sort of this step change. So we call it gaikaku, GAI, generative AI kaku, using generative AI to become totally a different company. And that's what we introduced, this idea of AI first with heart.
I wanted to ask you about this. I saw that last summer you implemented a company pause for a couple of months to upskill your employees on AI, something you called cyborganization. Why was this necessary at that time? And what did it look like?
I think mindset change is tough, especially in an org of over 9,000 people. First, we had to really upskill folks, but you'd shock the system. So we did a generative AI sprint. I spoke to everyone, whether you're from engineering and data science, you're an AI specialist, or you're someone just signing up merchants in a tier 3 city in Vietnam. And we said, for 9 weeks, folks, we're going to focus on learning and experimenting, where the goal outcome was every grabber has to be a technologist, regardless of what backgrounds you come from. Before we started the sprint, something like 80% of folks were worried that their jobs would be replaced. But interestingly, by the end of it, 80% was saying they understand generative AI so much better and they can see how it's helping their jobs. Total mindset shift, Bob. And that's the beauty. And it wasn't just, hey, we just wanted to create a sprint for fun. We built real generative AI solutions. For example, we created AI merchant assistant now that's deployed across millions of long-tail merchants. We worked with the top R&D labs across the world, like Anthropic. And yesterday I was just looking at, we use Claude 4 to think about how to make it so much more empathetic, so much more relevant for the merchant. So now it's helping them not just boost their sales, helping them with photo edits, helping them position how they look.
Okay, guys, I have the link. I am loading it up right now. Give me like 2 minutes. I'll keep playing this.
On grab food, across cut the customers, how to pack. They even ask questions, Bob, like, oh, business isn't good, times are tough, can you give me some encouragement, sis? And the merchant assistant talks in such an empathetic, such an encouraging way as their personal best friend. So that's the type of products that couldn't have come out without this generative AI sprint.
You mentioned that you're working with Anthropic and Claude, but as I remember, you also worked with OpenAI. You were like their first partner in Southeast Asia, right? So
Yep.
what's that about? Like multiple partners is good. I mean, in some ways, it would be.
All right, guys. Here we are. We are about to get started with this call. Who's buying some more shares? 100 shares I see here from Sasha. Love to see it. Love to see it. What else do we have going on here? Let's see. Okay, so the call hasn't started yet. I don't have this lobby music on because it's boring as fuck. What else can I tell you? Okay, so the other thing I could tell you in terms of why I love this company, right? I tend to invest in products that I use all the time. So, I used to love Apple. I still love Apple, but I have a bunch of Apple, right? I use the iPhone every day. I use Mac products every day. I can't go, 5 minutes without checking my stock portfolio, like crazy shit, right? So, Grab. Let me tell you a story about Grab. I was in Singapore. I was in Southeast Asia a few times. I go fairly often, but the last time I was there was maybe 5 months ago. And the last time I was there, I mean, I remember. So every time I go to Singapore, I'm amazed by how much Grab I see everywhere, meaning the ride sharing app that people have, the cabs that are everywhere. Now they have a fintech. Like everybody uses Grab in Singapore and Southeast Asia in general. So I don't know. I just got super, super bullish every time I saw that. I just kept buying shares. Obviously, I analyzed their financials a little bit, of course, but I'm more of a vibe investor, right? Yes, I'll read the earnings reports. I'll be analytical because I'm an engineer at heart. I'm a business guy, but I'm an engineer at heart. So yeah, mad conviction here. So I hope that everybody does well here with this stock. I see this stock end of 2026 going to 10 plus at least conservatively, right? So I am definitely excited about this call. The biggest thing I want to hear on this call is what they're going to do to allocate this $7 billion that they have in cash, right? They've had it on the books for a while. They don't really do anything with it. So I just want to hear what they want to do with it, right? As a shareholder, I want to know where they put that capital, what they do with it. So let's hope they touch on that a bit. And the other thing I want to hear from the CEO is about expansion, right? I know they're doing really well in Singapore, Indonesia, Thailand, etc. But I want to see are there other expansion opportunities? Oh, where are we grabbing market share from next? So all of those things I want to hear, and of course I want to hear about the AI story. The AI story is going to be, it's AI is in vogue. Obviously, everybody is building something that has to do with AI. So I want to see what their story is. It's probably autonomy, right? But is there more, right? Are they going to start going hard into drone delivery, for example? Are they going to, expand their margins that way? What are they going to do? So I expect them to mention that continuously throughout the call as a trend because obviously, they want to hop on that AI trend like everybody else. Okay, I will stop blabbling on because the call is starting. Let me present the call. Okay. Let's see here. What is going on? All right, here we are. We have the call up here.
Yeah, we can start.
Can you guys hear? What is wrong with this audio? Hold on a second here.
Ladies and gentlemen, thank you for joining us today. My name is Tyler. I will be your conference operator for this session. Welcome to Grab's third quarter 2025 earnings results call. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question, please raise your hand. If you had dialed into today's call, please press *9 to raise your hand and *6 to unmute. Please limit to 2 questions per person. I will now turn it over to Douglas Yu to start the call.
Good day, everyone, and welcome to Grab's third quarter earnings call. I'm Douglas Yu, Director, Investor Relations and Strategic Finance at Grab, and joining me today are Anthony Tan, Chief Executive Officer, Alex Hungate, President and Chief Operating Officer, and Peter Oey, Chief Financial Officer. During this call, we will be making forward-looking statements about future events, including our future business and financial performance. These statements are based on our current beliefs and expectations. Actual results could differ materially due to a number of risks and uncertainties as described on this earnings call, in the earnings release, and in our Form 20-F and other filings with the SEC. We do not undertake any duty to update any forward-looking statements. We will also be discussing non-IFRS financial measures on this call. These measures supplement but do not replace IFRS financial measures. Please refer to the earnings materials for reconciliation of non-IFRS to IFRS financial measures. For more information, please refer to our earnings press release, remarks, and supplemental presentation available on our website. And with that, I will turn the call over to Anthony to deliver his opening remarks before we open it up for questions.
Thank you so much, Doug. Really appreciate everyone being here with us. This quarter marks another vital step forward in our journey, not just in our financial performance, but in how we are building a more resilient, tech-driven platform for the long term. Our growth was a key standout this quarter, accelerating to new records as product-led innovations drove nearly a 6 million year-over-year increase in monthly transacting users to 48 million. This fueled a 24% year-on-year increase in on-demand GMV, or 20% on a constant currency basis. At the same time, we continue to maintain cost discipline and leverage our ecosystem scale to drive profitable growth. Group adjusted EBITDA rose 51% year-on-year to a new record of 136 million, marking a 15th consecutive quarter of sequential profitability improvement. Our adjusted free cash flow also improved by 185 million year-on-year to 283 million on a trailing 12-month basis. Now, these achievements are the direct result of our consistent focus on improving accessibility, affordability, and reliability. This has enabled us to continue growing earnings for our driver and merchant partners while expanding our marketplace, bringing new users onto our platform, and deepening engagement and loyalty among our user base. As we head into the final stretch of 2025, we expect to exit the year on a high note. We remain on track for our financial services loan portfolio to exceed $1 billion and for full-year on-demand GMV growth to accelerate from 2024 levels. As a result, both our mobility and delivery segments are well on track to exit the year at record GMV levels. With our teams executing with focus and AI unlocking new growth and efficiency frontiers at unprecedented speed, we're confident in our ability to drive sustainable, long-term value for our users, partners, and shareholders. With that, I now open the call for questions. Operator.
Thank you. We will now begin the question and answer session. Please raise your hand to ask a question and you will be called on. If you have dialed into today's call, please press *9 to raise your hand and *6 to unmute. Please stand by while we compile the Q&A roster. And your first question comes from the line of Pang Vit with Goldman Sachs. Your line is now open.
Hi, good morning, management, and thank you very much for the opportunities. 2 questions for me. Number 1, on the competitive landscape, Can you help us discuss some of the latest that you've seen on the competitive landscape, especially in Indonesia? You deliver a strong 24% year-on-year in your on-demand service overall. Wondering whether there's any color you can share for what is the growth you have achieved in Indonesia and what have led to your strong outperformance versus peers. That's question number one. Question number two, can you discuss further on your latest update in guidance? What have led you to increase the guidance, and can you help us break down estimate by segment?
Hi, Pang. Alex here. Let me take your first question, and Peter will take the second question. On Indonesia, it's a key market for us. Our business continues to perform strongly there. It remains a very competitive market, but what we're seeing is that the product-led growth strategy that we've been talking about for the last few quarters is driving an increase in MTUs for both deliveries and mobility. Particularly, the affordability strategy is bringing in a lot of Grab Bike and Grab Car Saver users at the lower end of the pricing ladder. And at the top end, Indonesia still has a lot of wealthy customers, and we've launched Grab Executive there for mobility. And there's a lot of domestic tourism and business travel, which is helping drive our high-value rides and our priority food delivery services. We're also growing Grab Mart, which is helping to drive those elevated levels of the delivery at GMV growth that we're seeing. So overall, it's a reflection, a microcosm of what we're doing across the group. I would say you can't see these in the numbers, but I can tell you that there's strong growth in Indonesia, and there's strong sequential margin improvement as well. So we're very comfortable with what we're doing in terms of the market position and our penetration of the overall opportunity in Indonesia, which remains huge and something we continue to be excited about as we invest in that country.
Hey, Pang, on your guidance question, look, you've seen our numbers from Q1 to Q3, how we've been performing. We're continuing to have that consecutive quarter-on-quarter growth in our EBITDA guidance. And part of that is the top line growth that you're seeing in the business that Alex just talked about. So you've got that nice momentum in our deliveries business growing at 26% clip. You've got our mobility business also growing at 20%. So, and then let's not forget also our financial services growing at 40% revenue, and our loan book continues to hit all-time highs. So you've got nice momentum just overall from the top line side, but also at the same time, we continue to be very disciplined on our cost structure. You see our regional corporate costs increasing only 8% on a year-over-year basis. But what's more important now that we're seeing about 150 basis points improvement in operating leverage as a percentage of revenue of our regional corporate costs. And that's critical as we continue to make sure that we're spending in the right areas. So we expect this strong top line growth to continue into the quarter, where our fourth quarter is usually our strongest quarter. And we're on track to make sure that we deliver all the things that Alex mentioned about affordability, reliability, accessibility. And so with that, we are more confident in raising our EBITDA guidance to the 490 and 500 million for the full year 2025. I do want to caveat as we enter into Q1, which is around the corner for us. It's one of our more softer season, which is very, very traditional for us. So, but we do expect to maintain that profitable growth going into 2026.
Thank you.
Thanks, Pang.
Thank you. Your next question comes from the line of Alicia Yap with Citigroup. Your line is now open.
Hello. Good morning, management. Thanks for taking my questions. Congratulations on the solid set of results. Two questions. First, could you elaborate a little bit on your MTU growth? Have you seen any, major differentiations in terms of the user profile you added this quarter compared to last few quarters? For example, is that more female this quarter, any more of the younger generations, or any like the second or the lower tier cities that contributed to the bigger additions of the new user this quarter? So any metrics that you could share would be helpful. And then second question is, given the successful conversions expectations of the product-led innovations to drive the order growth and also the higher frequency per user, as well as your explorations into the GrabMart and also the grocery business. So following few quarters of the accelerated GMV growth for your delivery business, how should we be thinking about the growth rate for the fourth quarter this year and also into 2026? Should the growth rate be normalizing around maybe mid to high teens, or would that be possible to stay above the 20% growth for 2026? And then if you are able to grow faster than the high teens or even 20% mark, would that mean your margins expansion will be more gradual or even potentially see margin flattish or declining for next year? Thank you.
Thanks, Alicia, for those questions. Let me take those two. So MTU growth, as you saw, on-demand MTUs grew 14% year on year. In fact, DTUs grew even faster. So our daily transactions are growing faster than our monthly transactions. So we are succeeding in our goal of being part of the daily lives of Southeast Asians. On-demand transactions, the actual transactions grew 27%. So you can clearly see that increase in frequency effect as well. And this is very much part of our strategy for driving the flywheel of increased demand, increased supply, improved quality of services, and driving further demand after that. In terms of the demographics, Saver deliveries obviously have been instrumental in acquiring new users, growing frequency as well over the past few quarters. So almost a third of our deliveries MTUs, joining the platform, the new MTUs are coming through Saver deliveries. So that's an important driver of the flywheel again this quarter. It's similar for transport, where we see Grab Bike Saver and Grab Car Saver also bringing in a lot of MTUs. At the same time, as I mentioned earlier, when I was answering Pang's question, the high-value services are also growing fast. So high-value rides grew 66% year on year. And then priority delivery is also growing fast. So we're seeing growth at both ends of the pricing ladder, which is healthy. But the critical thing is that we're also being successful in cross-selling and retaining these new users to build long-term value, long-term customer value. So what you can see overall, if you look at the GMV per MTU, so despite the strong growth in MTUs, the GMV spend per MTU grew 7% year on year. So I think that shows that the affordability strategy is both bringing in new customers, but also with our cross-sell is allowing us to deepen the value for each of those customers. So this growth effect is distributed both across big and small cities. You asked about that. But I would say that it skews to younger customers for the Saver products. But it does show that our product-led flywheel for deliveries and mobility is spinning faster and faster. And then your next question about growth rates going forward. We still feel that our MTU penetration of Southeast Asia is low when you consider the size of the population and the growing spending power. So when you look at what's driving these elevated growth levels in the last 3 quarters where we've managed to accelerate quarter after quarter, you can see that there are 3 elements which I feel are all sustainable going forward. One is the product-led viral growth. Without increasing consumer incentives, we're able, with group orders and family accounts, to bring in new users. So the ecosystem is self-generating and bringing in new users on its own. We've also got this very strong GU base. Grab Unlimited is the biggest subscription program, paid subscription program in Southeast Asia. The users grew again 14% year on year to another all-time high. So they now represent over 20% of our delivery MTU base. This is also a sustainable driver of future growth. And then we have this adjacent GrabMart opportunity where now we have this functionality called Grab More, where a food user can just add on a grocery order to the food delivery that they're about to receive, proving to be very popular. And that will allow us to penetrate more and more of our large food base so that we can keep GrabMart growing. It's already growing at 1.5 times the size of food, but we think there's potential to increase that penetration. In terms of the margin impact, we will be disciplined in driving sustainable growth, but also focusing on the absolute EBITDA growth. If you look at the margins this quarter, in fact, they've improved both for mobilities and for deliveries. As we've said in prior quarters, sometimes we'll launch new products and we'll promote those new products, and that will mean margins dip down. But overall, you can see that the margins this quarter have recovered to the average levels for the year. So there's no change in our margin outlook that we've stated for the longer term. We still expect to get deliveries to 4% plus and mobility to 9% plus. So we believe we can do this while not sacrificing growth. As you heard earlier, we expect fourth quarter on-demand V to grow sequentially from the quarter. So we will exit 2025 at record GMV levels and make a healthy entry into 2026. And we do expect margins for deliveries to continue to grow from these levels into next year, even while we invest into new product initiatives and the grocery growth, where we're seeing stronger and stronger traction. Thanks, Alicia.
Thanks, very helpful.
Thank you. Your next question comes from the line of Navin Killa with UBS. Your line is now open.
Hi, good morning, and thank you for giving me the opportunity. I had a couple of questions. One is with regards to your balance sheet. Obviously, strong cash balance. You raised the CBs earlier this year, and the business continues to be free cash flow positive. So how should we think about the use of this cash going into the next 12 to 18 months? And then secondly, in the context of some of the growth conversations that we have had, just wanted to understand how you are seeing the macro environment. And I mean, if you were to split this growth for this year between, let's say, macro market share gains and the impact of some of these initiatives that you have launched around new products, how would you qualitatively think of these three factors driving the growth?
Hey, Navin, it's Peter here. Let me kick it off with your first question around capital allocation, and I'll ask Anthony to chime in around the macro, your question around macro. On the capital allocation framework, no change in terms of how we're thinking about it. And we've always been on our focus has always been on three pillars. The first one is around investing for organic growth. And you're seeing that in the business, the profitability of our business and the growth that you're seeing. And some of that came from also some product adjacencies and tuck-ins that we've done as part of that profitable growth that you're seeing. But the organic growth has been really critical. One way that we've been deploying the balance sheet is on our loan book. Yeah, if you look at the loan dispersal for Q3, for an example, we hit roughly $3.5 billion on an annualized basis on that dispersal. So Q3 alone was up roughly about 56% on a year-over-year. And that's a majority that is on our balance sheet itself. So it's a great use of capital for us. It yields a higher rate of return. Actually, it returns above our average cost of capital for us. And we'll continue to use that balance sheet as we recycle those loans. That's just one example in terms of organic. We're also obviously deploying some of those capital in terms of investing in terms of new products that we're earmarking for 2026. On the second pillar is around what we call very highly selective M&A, which are more opportunistic, and those are a lot more where it's more speculative also. But those have a very high bar, as you know, and we've always talked about this. But where we have been investing in is in some of the longer term bet that we're looking at for things such as autonomous vehicles. And we've deployed some of those capital in making in those critical investments that we're leaning into. You've seen the announcement that we made with WeRide, for an example, May Mobility, as part of our strategic pillar in terms of making sure that we are the pioneer and we're leaning in terms of autonomous vehicles deployment here in Southeast Asia. But overall, as a framework, that M&A is a very high bar for us. And we want to make sure that the synergies that we can extract is as of a greater value. And then third, where there's excess capital, Navin will obviously look at returning it to our shareholders. So those remain critical, those three things that we believe in the recent capital raise that it'll give us strategic flexibility in the interest of our investors. We'll continue to look at and explore those longer term growth that Alex mentioned and how do we create the best value for our shareholders. But we are always prudent in terms of how we are managing our capital and our balance sheet. So hopefully that answers the question. Anthony, on the macro?
Yeah, thanks, Peter. And thanks, Naveen, for a really good question, especially on the macro environment. So look, in Southeast Asia, there's been a lot of positive focus recently. As many of you are aware, Malaysia hosted the ASEAN Summit earlier this week, and President Trump visited the region to finalize trade negotiations with several of the Southeast Asian countries. One to call out was the peace agreement between Thailand and Cambodia. These have been two very significant and positive events for the region. And we are seeing signs of tourism recovery in Thailand as the country heads into its seasonally strongest quarter of the year. Now, to Naveen, your second part of your question, are we seeing weakness in consumption? The short answer is no. Our platform is proving to be highly resilient. We're not seeing a broad-based slowdown. In fact, our model is built for this exact environment, and I'll point to two key reasons. One, our strategy is countercyclical. The uncertainty, in many ways, actually accelerates our flywheel. We are seeing a healthy increase in partners coming into our gig platform to find income, and that, of course, improves supply. This also enables us to reduce wait times, enhance reliability, and most importantly, it lowers prices for our users, which our users really appreciate. This increases our affordability and grows the overall user base, as you saw in our numbers, which is our key strength. Also, our focus on affordability is paying off. So this isn't new. Our focus on affordability, which we began in 2023 with products like Saver Delivery, Saver Transport, that was explicitly designed for this purpose. These services are now essential for our users, enabling them to manage their wallets effectively. So this makes us a must-have service, not a nice-to-have, which protects us from a pullback in discretionary spending. Look, but the reality is we may not be immune to macro trends, but our strategy is designed to be resilient and even opportunistic in this landscape. So we continue to reinforce this by partnering with governments as well. For instance, in Indonesia, we've been running what we call the Kota Masa Depan, which is the Future Cities program, in partnership with the Ministry of Medium, Small, and Micro Enterprises, where we have worked to support small businesses in digital upskilling across nearly 20 cities. And in Vietnam, our EV launch is really designed to drive better NPS and also lower partners' costs. These aren't side projects. They strengthen our ecosystem and create a more sustainable, profitable business for the long term. So we are confident in our strategy and our outlook.
Thank you.
Thank you. Your next question comes from the line of Venugopal Garre with Bernstein. Your line is now open.
Hi, good morning, and thanks for the opportunity. Two questions from me. First question is more something that you discussed early in the call about the GrabMart business, the grocery business, which is outpacing the growth of food delivery. Wanted to really understand in terms of regions that are driving that growth for you, especially geographic regions, and more importantly, want to understand what are those big initiatives that you would need to incrementally take to make this a much, much larger segment. The reason I'm asking this is because grocery on an absolute basis is perhaps still relatively smaller in terms of penetration compared to the overall TAM that is there in the region. So newer models like quick commerce, any thoughts around any change in landscape around the models that you might use to really scale up this business? That's the first question. The second one is more of a follow-up on the investment side of question that was discussed. I wanted to understand the investments that you have done in the autonomous tech company. This is largely to secure tech, or is it more in the nature of financial investment? And more importantly, could you also outline the current progress with respect to the rollout on autonomous? Thanks.
Thanks, Vanu. This is Alex. Let me take the first question. I think Anthony will take the question about AVs. So you're right. Our deliveries, our groceries business, GrabMart, is relatively small compared to the rest of deliveries. It's only about 10% of deliveries GMV today. So it's very small compared to the TAM that you are correctly identified as out there. We are seeing GrabMart grow across all markets. And one of the drivers for that is the rollout of Grab More, this capability that allows customers to add groceries to their food orders for the same delivery cost, proving to be very, very powerful for cross-sell into groceries. So GrabMart continues to outperform, growing 1.5 times faster than food delivery segment. And we've also seen that the users of both food and Mart demonstrate order frequencies that are 1.8 times higher than food-only users. So we know that it's a great driver of stickiness and loyalty and long-term value. In terms of the various business models, we are experimenting with some of the newer business models that would open up more TAM for us. So in Malaysia, where we have Jaya, we are experimenting with quick commerce around certain Jaya stores where we can really sweat the inventory and store assets. So without increasing our fixed costs, we're able to drive up the volume of orders quite significantly. Even though the experiments there are primarily grocery focused, but we have seen a nice step up in demand when quick delivery is an option for customers. So I think there's something to build on there, and we've started to experiment in 1 or 2 other countries as well, like Indonesia, where we work very closely with certain partners. So yeah, I think watch this space. Very early days for us, grocery focused, but we are definitely exploring new models which can help us unlock future large TAM. Now, Anthony, on AVs.
Yeah, thank you, Venugopal. Let me talk about the plans and our strategy with regards to AVs. Now, our recent AV investments are all very deliberate. It's part of our long-term strategy to lead the adoption of AV and remote driving across Southeast Asia and to secure the technology supply chain through strategic partnerships. While AVs are already a reality in parts of the world, we expect a longer ramp up to mainstream adoption in Southeast Asia for a few reasons. One, Southeast Asia is still behind in the cost curve. Labor costs in Southeast Asia are significantly lower compared to the US, with Singapore being an exception. Now, we believe, therefore, it will require considerable time for the unit economics to reach parity with human drivers. Second, the crossover point will occur when AVs become safer and even cheaper than alternative options before we see a huge transformation in the way current transportation is served. Now, as the largest mobility platform in Southeast Asia, AVs and remote driving are something we must lean into. We'll continuously learn about the technical optimization of AV performance on our platform. We'll also maintain a hybrid fleet approach for the foreseeable future and intend to collaborate very closely with regulators across Southeast Asia. Now, one of our top priorities as part of this, or I would say essential part of this strategy, is to work alongside regulators to upskill our driver partners as part of this shift. Our focus is to find the new jobs that will be required as we shift towards a hybrid transport world. We see new kinds of jobs emerging. For example, drivers could be remote safety drivers, data labelers, they could change LiDARs, cameras, and so forth. So as we lean into AVs and remote driving with several partnerships already under our belt and more underway, we remain very excited about the longer-term opportunity to build capabilities to operate a world-class hybrid human and autonomous fleet to deliver the best experiences for our customers.
Thank you.
Thank you. Your next question comes from the line of Wei Fong with Mizuho Securities. Your line is now open.
Hello, can you hear me okay?
Yes, we can. Go ahead, Wei.
Great, thank you. I have one quick one on the financial services segment. We see very strong growth there, right? But with sizable bad loan provisions, of course. I was just wondering if management can talk about what you have learned about the newly acquired customers in recent quarters and how you are fine-tuning your risk provisions going forward. That's it. Thank you.
Thanks, Wade. Let me take that one. You're right. We are accelerating our financial services growth, and we are reaffirming our goal to exceed a $1 billion loan book after excluding credit loss provisions by the end of 2025. You can see in this quarter, there's been an acceleration of loan dispersals. So we're now at a $3.5 billion run rate on an annualized basis, growing 56% year on year. So very strong underlying growth. We do see, as you mentioned in your question, an increase in the expected credit losses coming out of the models that we run to make sure that we're providing well for the future growth. It's a natural consequence of that growth. It's an upfront provisioning that occurs in the lending accounting of lending. And it's obviously offset against the revenue generation from those loans over their lifetime. So you should expect with this kind of accelerated growth that the ECLs will run through the P&L and sit on the balance sheet, as you're seeing in the current quarter. What I would say, though, is if you look at the underlying performance of the financial services business, without taking those provisions into account, then our financial services segment adjusted EBITDA improved actually quarter on quarter and year on year by about 4 million quarter on quarter and 17 million year on year. That's an important measure for you all to see because it underlies that if we don't need to pull down all of those provisions, it underlies that how we're getting operating leverage out of the growth of the business. You asked what we were learning from the customers. We are in many ways a data science company. So we are learning every single second of every single day from how our models ingest all of the different data points that we can generate through our ecosystem. Unlike banks, we can access a lot of unconventional markers of likelihood to repay that allow us to underwrite segments of the population in Southeast Asia that currently cannot access credit. These are often known as, underbanked, unbanked. So a lot of what we do is about financial inclusion, bringing people into the market, allowing them to actually establish a credit record. About 1/3 of our customers could not access data because they weren't on a credit bureau, could not access credit because they weren't on a credit bureau prior to borrowing from Grab and our financial subsidiaries. This is very important to us and very much aligned with our mission. The repayment record actually from those customers is very pleasing. They know that when they repay us, they start to establish a credit record and they start to therefore become included in the financial and economic prosperity of Southeast Asia. So we're very pleased to learn more about those customers and to bring them into the financial services domain for the first time. So the credit models, every time we launch a new product, the credit models obviously take time to be established. But what you're seeing this quarter is that across the banks and GFIN, we're starting to see that we've got credit models maturing. We've got new models being launched all the time. We're increasing the cycle speed with which our data science improves these models. So that's why going into this fourth quarter, if you run the numbers, we're predicting an acceleration of the loan book size. And we also are indicating that acceleration will continue into 2026. Thanks, Wei.
Thank you very much.
Thank you. Your next question comes from the line of Mark Mahaney with Evercore ISI. Your line is now open.
Okay, thank you. Two questions, please. One on the consumer incentives. Just talk about how we should think about where those will hold, going forwards. there's been a little bit of volatility, some leverage one quarter, deleverage another quarter. Are you running them at a level that you think is sustainable going forwards, or do you think we should expect to see leverage against those in the future? And then second, just talk about advertising intensity, or what I mean by that is advertising revenue, the ramp that you're seeing, just a little more color on where that is now, how much, any new pockets of strength in there, and how to think about growth for that particular segment over the next year or two. Thank you very much.
Hey, Mark, Alex here. Let me take that. On consumer incentives, you can see it's come down a little bit this quarter. We think that we can keep it at around this level going forward. Because we're getting a lot of boost from the viral product rollouts that we've been doing. And so we find that the incentive level doesn't have to be as high, despite the fact we're accelerating growth of both deliveries and the mobility also staying relatively high, and transaction volumes in mobility going up to 30%. That's all been achieved with a reduction in incentives quarter on quarter. But I would say in terms of modeling, if you can assume that the incentives stay at around this level on the consumer side. In fact, this quarter, we've had to actually boost the driver incentives slightly because the growth in demand was so high. We needed to make sure that we can maintain the fulfillment quality and reliability of our services. So you can see that in contrast, there's a slight increase in driver incentives. So going to the core question, these incentives can go up and down a little bit quarter to quarter. But in terms of modeling steady state, I'd say we're about the right levels where we are today. The ads piece, the bigger we get, the more interesting we get for advertisers, whether those be the merchants on the platform or FMCG customers who want to advertise across the platform as well. I think for the food side, we see continued penetration of advertising. So we expect that to continue to move up gradually into next year. We've got the total number of quarterly active advertisers joining our self-serve platform actually increased 15% year on year. So we're continuing to see new advertisers coming onto the platform, which is great. Many of them coming in through our self-serve capabilities. And then the average spend of the active advertisers on that self-serve platform grew 41%. So once people try the platform, they see it works very well for them in terms of ROAS, and they start to increase their spend. So these are both lead indicators of what we expect, which is a continued increase in the penetration of our deliveries GMV with ads. As we grow the GrabMart business, which we've talked about a lot on this call, we expect to be able to attract more and more FMCG advertisers. And there, if you look at some of the models in other parts of the world, you can see the penetration of advertising for online grocery businesses is actually even higher than online food businesses. So that's something that as the scale increases, we should be able to improve as well. So we're very bullish about the advertising part of our business. In fact, I would say it's a key driver of margin growth in the longer run.
Thank you very much, Alex.
Thanks, Mark.
Thank you. Your next question comes from the line of Divya Gangar with Morgan Stanley. Your line is open.
Hi, good morning. I had two questions. One is actually a continuation of what you just said, Alex, on the advertising being a driver for deliveries. So my question is on deliveries margins path to 4%. Could you talk about how different are the margins across countries, just qualitatively, and the role of some of these countries lifting up the overall portfolio margins? In the past, we've thought that Indonesia has been a drag, but looking at the competitive dynamics there, the margins for delivery seem to be relatively healthy in Indonesia, at least for our competitor. So trying to understand how we look at that path to 4% from an advertising country-wise perspective, as well as GrabMart and how dilutive that is to margins. So that's my first question. And my second question is on financial services. Now that we're closer to the break-even year for fintech, could you maybe just share the framework and the milestones we need to hit over the next 6 months to be able to meet the target? And what do you see as the key risks? Also, if you can talk about some typical use cases that you're seeing for this loan book expansion, especially on the digital bank side, that would be helpful. Thanks.
Thanks, Divya. Yes. In general, the mart business has a lower margin than the food deliveries at this point. But of course, that's a lot because of the speed of growth. And also because the dynamic with the FMCG advertisers is such that we get more valuable to them the larger we are. So although we have a lot of interest from FMCG advertisers, I think we're relatively small compared to some other venues still in terms of commerce in general. And therefore, it's important that we continue this growth. And I think that's where you start to see improved margin on the GrabMart side. In terms of Indonesia, I can confirm Indonesia continues to grow strongly again for us. Our deliveries business in Indonesia grew in the high teens in this year on year for this past quarter. So although the margin is stable, we're actually able to generate a lot of growth from that situation. And like I was just saying, we feel that it's important to get larger in order to really realize the full opportunity from the mart business. In other markets, for example, Malaysia, we've already reached our steady state margin target of around 4%. And that's where we're starting to experiment with some of these other models around instant commerce, as I mentioned earlier, because there we can generate a lot more growth from entering into these adjacent markets based on the asset configuration that we have with Jaya Grocer doing very, very well in Malaysia, for example. So there are some differences across markets. You're absolutely right. But we're adopting a portfolio approach. So we're making sure we achieve our margin targets, not just across different countries, but also across the verticals so that we can produce this kind of high growth, but also maintain our margin progression towards those long-term targets that we've shared with you over the past quarters and years. Moving to financial services, yes, we're coming now towards our break-even year. I can confirm that we are reiterating that we will break even overall as a segment in the second half. So it's a combination of banks and GFin, and that the banks will break even in the fourth quarter. The milestones really relate to loan dispersal growth, which, as you can see, is accelerating now to this annualized run rate of 3.5 billion in this current quarter. We are starting to see that the credit models are maturing nicely. We now have flexi loan products available for consumers in all three of the bank markets. We've just launched also a flexi loan product through our non-bank financial company in the Philippines, just in this last quarter. So we are able also to serve personal loan needs in other parts of the region beyond where we have those three banks using GFin as the vehicle. We can share expertise about the credit modeling across those countries, which is proving to be very, very successful. As I said, we're really a data science company, so the way in which those models advance is super important to us. You can see that EBITDA can fluctuate as the ECLs flow through the P&L and into the balance sheet. So I think the key thing to watch there is that the segment adjusted EBITDA, excluding the credit loss provisions, is continuing to improve. So that gives us line of sight and confidence that we're going to hit those break-even targets. So the key thing for you to watch is the loan dispersal growth. We are seeing operating leverage on the cost base too. So we're confident that we can continue to manage the costs very tightly going into 2026. In terms of, you asked, I think the last part of your question was asking about the different use cases. We are serving on the SME side, we're serving merchants that are on the Grab ecosystem. So we have tremendous line of sight of their cash flows. And therefore, the credit models have a unique advantage relative to a conventional bank that wouldn't have line of sight of those cash flows. So small businesses will be a big focus for us. The unbanked and underbanked, as I mentioned, particularly gig workers, we're able to finance them very, very accurately. And you can see that, well, I think we've said that the risk-adjusted returns from our lending activities are actually comfortably above our cost of capital, and they remain above that. And even as we grow at these rates, in fact, the returns improved slightly quarter on quarter. So we are continuing to grow very rapidly, but at the same time within the risk appetite that we've set for ourselves because of the performance of these credit models. I hope that helps in terms of some scenarios where we can provide unique capabilities to help the progress of Southeast Asia by bringing more and more people into the financial inclusion sphere.
Yeah, thank you very much.
Thanks, Divya.
Thank you. And your final question comes from the line of Jiang Xiao with Barclays. Your line is now open.
Good morning. Can you hear me okay? Good morning.
Yes, we can,
you hear me
John.
okay? Okay, perfect.
Yeah, we can hear you, John.
Great. Thank you for taking my questions, and congrats on a very strong set of results. So first question is really the follow-up on the previous one on the food margins. I think last quarter you talked about Q4 delivery margins should be up sequentially from Q3. Want to confirm that's still the case, but more importantly, looking into 26, just want to get a better understanding on the sort of the pace of the margin expansion for the food business, and what are some of the factors may kind of make it faster or slower in terms of expanding the margins for the delivery business for 26. And my second question is around another way to monetize the delivery business. I think a couple of quarters ago you may have talked about some of your thoughts around in-store kind of newer monetization. I recall you might have mentioned some things to start at least trials in 26. I was just wondering if there's any update around that. What may be the sort of the modality around that type of in-store monetization? Thank you so much.
Hey, John. Let me take the food margin question that you asked about. The way we approached deliveries is a portfolio play, and Alex kind of alluded also earlier when he answered the question to Divya. So as you know, the portfolio by delivery product is quite broad and quite wide compared to, say, to our mobility business. So if you look at it, we have the food business, and we have the mart, which is a composite of the grocery business, but also there is some other parts of the non-grocery that we also serve there. We also have other forms of food products that we have, things like group orders. We have also dine out. There's omni-commerce product features that we've also deployed in the marketplace. So it's a real broad portfolio. So the way we think about it is the margins that you'll see in our overall deliveries, it's better to look at it as an overall deliveries business. It continues to be optimized. Now, there will be times from quarter to quarter where we will invest and lean into adopting a product or where there's a product launch, and you've seen that in the previous quarters. But overall food margin as our core business today continues to see improvement overall, which is exactly what we want to see, because it's the most mature about all deliveries portfolio of products today. Where we are starting to invest also and also scale is in the area of grocery delivery or mart deliveries that we've spoken a lot about. It's still underpenetrated. It's 10% from our overall deliveries business. We also have other products that we're pushing. If you look at the cross-selling that we're doing also across our different food and mart products, also it continues to increase. And we want to see more adoption of those other products that we've introduced from the beginning of this year. So as a strategy overall, it's a portfolio play. You'll see that as a mixture of portfolio, those margins will be pretty much on a upper trajectory, but the mix between those margins will change quite a fair bit because again, the way that we're just on strategy in terms of scaling our deliveries business, that growth that you're seeing is a combination of those factors that you see on our portfolio play. At the same time, also as the countries and each of our countries also continue to execute, you'll see also the margin profile of those countries also look somewhat a little bit also from a portfolio different from country to country as we put on the gas on certain things and we pull back on certain things also at the same time. So, but overall, the trajectory is moving up in the right direction. It's a portfolio that you'll see, and the monetization that comes with it also comes really critical, and that's where Mark asked the question, or Divya, around advertising also is really important because the advertising piece is a wrapper that goes around our deliveries play, which is really critical. And we're bringing in more and more advertisers on the platform itself. So I hope that gives you a bit of a clarity. We don't do any in-store. We don't have any in-store in terms of offline retail or anything of such, except for the Jaya portfolio that we have in the supermarket business. We do have certain gray stores that we use today, which is really important. But in terms of how we work with the offline retailers, especially is in the area of making sure we bring in more traffic to our food merchants. So the dine out that we do today brings today all the ingredients for a user to transact from an online Grab app to an offline experience, whether it's through the in-store dining that we serve today, whether also the reservation system that we're using now on the Grab app also. That omni-commerce play becomes really important in terms of monetization, but also making sure our merchants are also continuing to increase their earnings and traffic at the same time.
Thank you very much, Peter.
Thanks, John.
Thank you. That concludes today's question and answer session. I will now turn the call back to Peter for closing remarks.
Well, thanks very much, everyone, for dialing into the call. We also appreciate your time. Anthony, Alex, and I would like to express all our appreciation especially to our driver community, all our merchant partners, and also to our users and shareholders for their continued trust on all of us here in Grab. I also want to thank you to all the Grab team for a great quarter. Thank you all, and we're looking forward to closing the year stronger than ever. We'll be on the road together with the IR team, Ken, Doug, and I. We'll do our usual hitting the roads, bringing the pavements. So we'll be attending various IR conferences across Europe, the US, and Hong Kong, and Singapore over the next coming weeks. So if you wish to meet up, please just reach out to the IR team. We'd love to see you in person. Until then, we'll speak at the next quarter earnings. Thanks, everyone.
And this concludes Grab's third quarter 2025 earnings conference call. Thank you for your participation. You may now disconnect.
All right. What do you all think? How was that call? I think overall they crushed earnings. Overall, they had some really good discussion points. I summarized it here. If we want to go through these for a bit, 5:15 I'm out of here, or whatever, 8:15 I'm out of here because I want to watch some Monday Night Football. I got some bets on. I got I'm going full Chad for my bets. I'm going Cowboys, big. Anyway, let me jump into these notes here real quick, and then we can chat over them. All right. Okay. So put in the chat how you feeling, first of all. How we looking? Are we sleeping well tonight? Are we opening green? What do you guys think? All right. Okay. So a few things. All right. So top level takeaways from the call that I saw that I liked. 1 billion in loan volume is pretty huge. That's a pretty major milestone for the company. I think when they first released their fintech business, they barely originated any loans. So it's nice to see that they have these models that are really telling them, they're like actuary models, right? And they're really telling them like the repayment kind of percentages and how likely is a person likely to repay their loans. So it's good to see that 1 billion in volume. GMV hitting record highs. He mentioned that guidance raised. Obviously, no signs of consumption weakness. I mean, good to know. Good to know people are spending still in Southeast Asia. I mean, seems pretty straightforward. And he mentioned, Tan mentioned that Q4 is expected to be strong. I mean, I get it. He said strong. We're thinking what, like $1 billion in Q4 would be amazing. We'll see how that trends. $1 billion in Q4 could be pretty hot. All right, fintech segment. On pace for break even by Q4. Huge milestone for the fintech business, I think. Adjusted EBITDA improved quarter over quarter by 4 million and up 17 million year over year. I don't know what these absolute numbers means. He didn't talk in terms of percentages, right? He just mentioned absolute numbers, 4 million, 17 million. I'd have to look back at those earnings to see what percentage increase this is. He kept, and they always keep on saying this, by the way, they are a data science company, right? They use unconventional data to evaluate creditworthiness of people. So essentially, when they issue you a loan, they'll use all sorts of unconventional signals to give people loans with the highest chance of repayment. I think that's pretty strong. Obviously, he spoke a little LLMs, he spoke models. He's riding the wave, he's riding the trend. I get it. Incentives are down. So the other thing, actually, this has nothing to do with fintech, but he mentioned, so incentives. So I worked in the on-demand space for a while. So I was on the courier side of the business. So I ran our courier team. And what we used to do for drivers is we used to throw cash at them for them to drive, right? Andre here says they do not know how to judge credit. I mean, listen, I need to dig in. I haven't dug in, but according to what Tan said, it was pretty bullish. But we'll see. So anyway, their incentives are down. This is good, right? They don't have to throw money at people for either at their consumers, their merchants, or their couriers in order for commerce to happen, which is great. I remember when I was at Postmates. I don't know if anyone remembers Postmates. But at Postmates, we incentivized our couriers like crazy. Throughout my career, we had negative margins. Like, it was just insane. But we needed supply to come online when it needed to come online, right? We needed consumers to purchase and provide that demand when we were weak in demand. So we threw money at people. Our merchant platform was the only one that we really didn't incentivize too much, and that's fine. I mean, listen, you do what you got to do to get that GMV circulating within your ecosystem. Three-sided marketplaces, and especially now with all sorts of other modalities like drone delivery, autonomous vehicles, etc., they are super hard. So you always have to seed supply. You always have to seed demand. You need to do this constantly. So I get it, but it's nice to see that their incentives are kind of down while maintaining the same margins, which is great. So let's dig in real quick. Mobility and deliveries. Okay, so mobility margins are up 9%. Delivery margins are up to 4%. Strong rebound after investment heavy quarters. Yes. So again, these margins are very healthy for the size of company that Grab is at right now. The higher they go in kind of volume and transactions, the more they can improve these margins. But I will tell you, working in this cutthroat space back in the day, the margins are super hard to squeeze here. You have human capital involved, which is a big kind of cost of goods and services, right? So you have to pay your couriers. You have to pay. There's always a human in the loop. So when these guys are going to be able to automate more parts of their business, they will definitely see their their margins across the board climb. And what I thought Tan mentioned, which was really cool, is they will find other jobs for the human labor that they employ currently. So we'll see what happens. GMV per MTU grew 7% year over year. So this one I actually like a lot. So they mentioned that they're like a product PLG, essentially product-led growth company, right? So they're able to increase the amount of gross volume that goes through their system per monthly transacting customer. So that's a very good metric. 7% is very good year over year. And then Another thing they mentioned is, or that Tan mentioned, I think, is that they have a focus on affordability, right? So they want to make sure that customers come to Grab because they're getting a good deal. So Savor Deliveries is showing a lot of growth, and they mentioned that a third of new users come through that Savor Delivery channel because they want to get a good deal at Grab. So while those margins are maintained, they're able to offer cheaper goods to people. And I'm sure they offset this by higher margin products, right? So they probably have priority delivery for certain segments, etc. But this is great to hear. Advertising revenue. So the thing is with the advertising revenue that they didn't mention a lot of is they mentioned like, hey, it's trending in the right direction, but we're so small that we're not in we're not an Amazon, we're not even an Uber, right? Where we can just, attract huge advertisers and make a lot of money in that business. But they didn't put any numbers to this. I'm sure it's in the sheet that we'll look at soon. And then finally, a few other things to go through. Okay, these GrabMart and Commerce, not as exciting. Let's talk about autonomous vehicles and M&A. So the big question that was not answered on this call, right, I think, which we've all been wanting to hear, is Grab has $7 billion in cash. What the fuck is Grab going to do with this cash? And we didn't get an answer to that. But we got the usual. With M&A, we need to be strategic but cautious, right? So that means, guys, we're not telling you what we're doing with this pile of cash, okay? So stop asking us. Or honestly, none of the analysts even asked. If I was in that room, or if I was on the call to ask this question, you bet your ass I would hammer Anthony Tan and be like, yo, what the fuck are you doing with your pile of money, dude? Anyway, they are investing a lot in AVs. That's good to hear, right? Southeast Asia, the AV market, forget about Southeast Asia. Let's take a step back. The AV kind of landscape in general in the world is super nascent, right? I happen to live in San Francisco, where I see Waymos every day. I actually am on the Tesla robotaxi in that ecosystem as well. So I take those. So for me, it's very normal to jump into an autonomous vehicle. But can you imagine people that are in Thailand, that are in Indonesia, that are not even in Singapore? Singapore, I consider a high-tech capital at this point, right? And they're still super behind. So it's very good to know that Grab is going to be at the forefront of this AV revolution that's going to kind of play out in the next 5-10 years in Southeast Asia, right? I am a true believer in Southeast Asia. I feel like it's a lagging indicator to a lot of things. I don't know if anybody has been to Vietnam recently, but when I went to Vietnam, I was amazed. I was like, wow, this is like what Thailand used to look like 3, 4, 5 years ago. And you can just tell that it's going to get way more expensive, and the cost of living is going to go up, and their tourism is going to boom. So the fact that they are investing in those Southeast Asia regions in general is amazing to hear, and especially investing in autonomy. They didn't mention anything about drones and drone delivery, but I think that's a key. That could be key to their success as well. And yeah, I think overall I'm very bullish. Margins and outlook. Yeah, some guy Jang at the end asked him about focus on what's your expansion? Within the delivery business, how are your margins trending? Nobody fucking cares, I guess. Tan was or whoever, Alex was it's part of our portfolio play, and food is only one of the things we deliver, yada, yada, yada. So yes, they're continuing to expand their margins, etc. But come on. Boring question. Cool. So that is kind of a rapid fire recap of what we just heard on the call. Overall, great quarter. I think that let's look at the stock real quick, actually. Let's see where we're at right now. We are at... Yeah, I did actually ask ChatGPT for my notes, but do you know what I did? Here, let me show you. I actually took raw notes, which you can see right here, right? And I fed those raw notes to ChatGPT so that it could summarize it for me so that I don't have to go line by line on these notes. So yeah, the bro used ChatGPT to summarize his notes and talk through them like every other normal person in the fucking world. Let's see. We're down about 1%, and we're at $6 for Grab. So let's see where we open tomorrow. All right, that is it. I big haters, I know. I mean, listen, it is what it is. I love doing this stuff. I love sitting on these calls. I love just talking shit. And mixing some good vibes with some quantitative. I'm not going to sit here and go over like specific numbers. Speaking of, actually, the last thing we should do is just look at their revenue numbers here, right? Sorry, their third quarter results. So on-demand GMV, wow, big jump, 20%, which was nice. On-demand GMV per MTU, they mentioned this in the call, 7% and 4% year over year. And then I think the most important one here for me, at least, that I want to see is continued revenue growth year over year. Right now, they are 22%, right? I want to see this increase. I think they can. What concerns me the most post earnings? We always talk bullish, but what's the thing you're most worried about despite being bullish? That's from Brennan. Yeah, so I would say, Brennan, the thing that concerns me most are external factors. So I'd say, the regulatory landscape in Asia is one of those things. So, Asia is, with the exception of Singapore, which I think is fairly decent, Asia's regulatory landscape can be, Southeast Asia, sorry, it can be somewhat corrupt in a way, right? So if Grab continues to grow and Grab continues to have success, what's to say that some of these governments don't want a piece, right, of that success? So to me, that external factor is one of the biggest risks that I see outside of just maybe weak execution. But I don't see the weak execution story. These guys continue to execute. They continue to be in the domains that they need to be at. So anyway, that's the biggest risk I see. They're more macro external factors versus kind of internal factors. And then really one more that I'll mention that is just like there is a macro risk, right? A kind of a global downturn, and Southeast Asia is already a place where people don't spend as much as Europe, the US, etc. Right? So what if people just get hit so hard that they can't spend and splurge anymore? That's a big one for me as well. Cool. Yeah, that's a good point, Ractorius. 60% growth, Grab's price movement is quite tame, for sure. I mean, yeah, the thing is with the stock is going to do what the stock is going to do. The stock has, if you look at the chart, I don't have it here, but I should have brought it up. It's like since I've been buying in the threes, it's had its ups and downs and it's been relatively steady, but it has climbed, right? We're in the sixes. So I doubled my position already, which is nice. I'm liking the kind of consolidation in the six. I think building that base will allow us to go higher. So yeah, relatively tame, but hey, it's fine. Gregory Seitz is asking about the possible acquisition of GoTo, and was anything mentioned? So nothing was mentioned on the call, but I think that because GoTo has all those fraudulent charges, etc. I think what's ultimately going to happen is some consolidation here in the space. So I think that Grab will snag them up for a good price. Eventually, I think they're staying kind of hush hush about that, but it will serve as not so much a technology. It won't serve so much as a technology play, right? Like acquiring GoTo for their tech or for their engineering, but more of a kind of expansion play. So yeah, nothing mentioned, but that's my take. What else? Let's see what else we have here. I can see it around $12 within a few months, Q2 2026. Yeah. So my conservative price target is $10 by the end of 2026. I actually have a position, a leverage position. I have $7 2027 calls, and I have $10 2027 calls as well. Not a spread, both leaps. I have a substantial amount of those contracts. I have about 750 of the 10, and I have about 500 of the contracts of the 7. So we'll see. I sleep well at night holding this stock. So yeah. This is not a stock that you also can sell. Like the premiums on the stock is not going to, yield you anything. So I don't know if you want to farm. It's not worth farming calls or selling puts against it, in my opinion. So I kind of just stay put and play the leverage with purchase of leaps. That's what I do. Yeah, but overall, I'd say just for the people that are joining, a recap is very strong quarter. Again, I expected a very strong quarter. And just a lot of innovation happening, right? So yeah, that is what we got from Grab. I think let's look at the poll. What do we think here? So actually 84% of you think that Grab will go up tomorrow morning. We'll see. We'll see what the market does. Anyway, it's been pretty choppy. It's been a pretty choppy start, I'd say, to November. But we'll see. I think if we continue to have solid earnings, we should see some good movement here in general from the broader stock market. Hopefully, we get a nice Santa Claus rally to end the year. Crypto is not following suit. But we'll see what happens with crypto. Anyways, I am going to go watch that Monday Night Football game. I have a nice little bet on the Cowboys. I'm a Chad tonight. I'm going full public bet. And I will see you all on the other side. Thanks a lot for joining. If you enjoyed this stuff, subscribe. It helps me. You know what I mean? And, I'll do these in the future too. And I'll potentially throw some more content out there. It's kind of like a mix of vibes and quantitative. So if you guys like this kind of stuff, subscribe. It really helps me grow my channel. Okay, fine. I'll answer a few of these. Leap options. What's the idea behind having the leap options? Is there a good profit? So the idea, Prasham, behind having leap options is instead of buying the underlying share, and profiting from, an increase or potential decrease, right? So there's always risk here. So for example, let's just say I buy a ton of Grab and it goes up 5%. I made 5%, great. But if I had a leverage position, which is still relatively safe because a leap is like 1 to 2 years out. So it's still a relatively safe leveraged position to take. So if, the stock moves 5%, my leaps will likely move maybe 10%, give or take, depending on the Greeks. We're not going to get into that here, but depending on the Greeks. Yes, going to buy the S&P 500 is also a very good idea. Okay. All right. That is it, guys. Thank you so much again. Subscribe. We'll do this again soon. I'll do it with another company soon. And thanks again for everybody who subscribed. I appreciate it. Peace.